Hi, Andrew Mall and Jeff Hill here with Link Realty, and we're here today at Parlor in downtown Kansas City, Missouri, to discuss a little bit about what's going on in the market with our good friend Steve Tremaine at First Bank. And of course, the question we get all the time from our clients is, Steve, what are interest rates going to do right now in this environment?
Man, that's a great question. And one of the things that I've learned after being in 22 years in the mortgage industry is I consult with the experts. And I brought my A-ball today just so that we would know exactly where rates are going to go. So hang on a minute.
Here we go.
It says they're going to come down.
Nice.
We like to hear that.
Yeah. So,
Well, good.
and then they're going to go back up. And then they're going to come down again, and then they're going to go back up. No, okay, I'll quit this one up.
Well, it is something that a lot of our clients are asking about, and I think there's some opportunities in a changing market. And I know that Jeff and I were talking about one the other day where you fire.
Yeah, I think it's just impossible to time the market and to sit on the sidelines expecting to jump in at the perfect time and then secure a house at the same time. It's just not. Prices are going to continue to go up over time. Rates are going to fluctuate, awesome, decent or bad. But you can get a house and refi later. A couple of my clients had a lot of success. We actually were able to negotiate deals. So instead of paying full price or over the ask with multiple, they were able to negotiate deals, secure the house, and then actually pay less. Because they're able to pay over, and it's it could be a 20% swing on your sales price. Payments lower, they got a better deal on their purchase, and their payoffs lower for when they do refinance when rates are favorable again. So,
Which is an opportunity in the market right now because there's less competition, so you're able to get a little bit more for your house, even though the interest rates might be high. Eventually, they'll come down, right, according to your 8-ball.
Yes.
I've also had a lot of clients asking me about, well, it's now the time for an ARM. And so tell us about your ARM product that you have.
Yes. We have a 5-year, 7-year, and a 10-year ARM, and they're extremely popular right now. When a 30-year fixed is around 7%. When you compare, we were talking earlier about a client of mine who was buying a new construction home, and the difference in payment for him was around $300, just over $300 a month, going with a ARM product versus a fixed rate product. And so I think that most people who can qualify for an ARM are willing to take that risk hey, let's save the money right now on our monthly payments and take the risk that we're either going to sell this house before the ARM even goes into adjustment, or we're going to be able to.
Ton of acronyms, but just in case you don't know, an ARM is an adjustable rate mortgage. But that is a good product right now, and I've had a lot of clients asking about it. And one other thing that I think is an advantage and something that you should take advantage of now as a buyer is you could lock into a home, put a contract in, and if the market improves, there's a float down option as well, correct?
Right. Most lenders allow for a float down if there's a significant improvement between the time that they lock in the interest rate and they go to closing. And so once you've gone to closing, there's not a float down opportunity, of course, but during that whole process or escrow, there is an opportunity to be able to float down.
And that might help someone, say, get off the fence about moving forward with a home now because A, competition's down, and if the market does improve, there's that option out there. So what else do we have with what's going on today?
Yeah, I guess I just feel like the lack of competition is the biggest factor. So it's spring market. We are starting to see some multiple offers, but it's nothing like it has been the last couple of years. So those bidding wars got crazy out of control with, I mean, 50,000 over the ask wasn't uncommon. So,
And we're now seeing that reflected in Johnson County appraisal prices and things like that, which just came out in the mail. So if you have any questions, certainly give us a call. But, it might be a changing market, but again, I think there's opportunity out there. So if you have the ability to do so, buy today and make sure you're talking to guys like Steve before you ever get out in the market, because knowing what you can afford will help you sort of navigate this market without having any surprises.
yeah, and I've had a couple of people actually tell me lately, oh, I'm going to wait for the market to come down, which is just not realistic. Prices are not going to come down. Prices are going to continue to go up. So the longer you're on the sidelines, the more you're going to pay. Do you want to wait till they're 5% more, 10% more, 20% more? I mean, yeah, you may save 1% on an interest rate, but you're going to pay 10% more by waiting a year or two to buy. So that's another reason to not get caught up in or frozen in indecision land. So
Well, once we do see rates tick back down, I'm sure that there are a lot of people who are waiting for rates to come back down. So then you're going to be in a much more competitive. You're going to be trying to buy that same house that's now worth 20-30% more on price, and now you're going to have to go up against a whole bunch of other people who are now coming out of the woodwork because rates have come down, and you're going to end up overpaying.
And on top of what Jeff just said, if you wait even longer, you're going to start paying even more and higher prices as appreciation goes up, because this is a supply and demand issue right now. We don't have enough supply filling the gaps. And when you have economic issues that push your interest rates up, the only thing that can improve is your rate. So what is the saying? Date the rate and marry the house. Is that right?
They say that. Yes, I've
So
heard it.
I think that's what applies in today's market. So thanks for being here. Jeff, Andrew, Steve, all wish you a great day, and looking forward to a healthy spring market.
yeah, have a good one.
Do it. Bye.